Alright, y'all, welcome back. It's Cody Capital. I'm Kenny. This is live action right now. It's Tuesday, January 7th. We're looking at these charts, we're looking at the market. It's been a little choppy of a day. We did a review this weekend. Pretty much everything that we said was going to happen pretty much happened. The market gapped up Monday, and it also had a bit of a move up this morning, but the market actually turned around on us during the day. So that's cool though. We're looking at, on my review, I went over this chart here for Carvana. I said that I like Carvana to the downside here, so that would be taking puts. And so the reason I like that is because, one, Carvana has a crazy run up, really because of a short squeeze here. If we look back on the weekly chart, you can see Carvana was down to about $3 and some change here. And that was December 2022, it was at $3. Now it's at $200. This is mostly because of a short squeeze that happened. There were a lot of, to explain the short squeeze, really, big hedge funds were betting against this stock. They were like putting out bad news about it, and they wanted the stock to go down because they were short selling it. So when you short sell it, it means that you're hoping that the stock goes down for you to make money. You're basically taking out somewhat of a loan from the brokerage to sell X amount of shares for a particular price, and then you plan on buying back those shares later on at a lower price. And so that's how you make your money, because you sell the shares, you get the money for selling the shares, and then you buy back the shares at a lower price later on, keeping the difference, right? So that's what like the big hedge funds do. So they'll take out a bunch of, they'll short sell a bunch of shares on a particular company, put out bad reports on it, hope that the company goes bad. So that's pretty much what happened here, except Carvana did better than they thought they would do. And so Carvana came out with some decent earnings. They did way better than the hedge funds thought they were going to do. And so then the stock started to move up. When the stock starts to go up, hedge funds are losing money. Now they have to close out on their short positions, meaning they have to buy the stock back. And now they're buying it at a higher price, losing money, and also pushing the market up because you're buying the stock. So the market's going to go up if you have to buy a bunch of shares. And so that's what happened here. It's not because of their earnings. It's not because they're making a whole bunch of money. I'll just run off some things here real quick. Carvana, earnings per share growth from this quarter that just passed, quarter 3, compared to last year's quarter 3, negative 82%. Negative 82% earnings per share growth from year over year, quarter to quarter. Okay, profit margin, 2.3%. They only make $2.3 off of every $100 they make. They take home $2.30 of that, 2.3%. So that's not good. Total debt versus capital, 91%. 91%. They have debt of 91%. That means that they have $10, $9.10 of that is debt. So they've really only got 90 cents. So add that with profit margin of 2.3%, earnings per share growth is trending down. Financials are not good here. So this is a clear indication the stock is running like crazy. Financials are horrible. It's not like it's a super new company. It's been around for 10 plus years. Yeah, so after it's ran up, it broke below a couple strong areas of support here. And it actually rejected this 212 area here. Then we had a very big inverse hammer here, which is a bearish sign. And so when I did my review over the weekend, I said that I thought the market would go up in the beginning of the week. So I didn't want to take a put, yesterday or even this morning, top of the morning. But now I see the market starting to turn around, back around to the downside. Seems like, if we want to take a look at SPY really quickly, we can see here. So when I did my review, we were on this candle here for Friday. And so here you see the market jumped up about 0.6%. And today we're now moving back down to the downside to close that gap that it made on Monday, which we expected it to do. It actually ran up all the way to almost $600 on Monday, and then came back down to close at around $595. So now you see it's here closing that gap to the downside. I think it may continue to move down, maybe even a 587 here or so. We might even see 586. So now I'm no longer like, super cautious about getting into a put. So I'm looking at this Carvana put here, and I'm gonna go ahead and write down the exact put that I'm getting into. And again, that's gonna be on this Patreon post. And so the exact expiration date, strike price, the stock is Carvana, CVNA, and it's gonna be a put option. So calls are when we want the market to go up, puts are when we want the market to go down. So I'm thinking Carvana can come down all the way to 160 here. So I'm expecting that move to happen within the next 3 months or so. So yeah, I'm going to list out exactly which contract I'm getting into and exactly when I get into it. But look out for this play coming up soon. All right, y'all, have a good one, man. Logging out. Let's go.